So let's talk about crypto. Is it the financial revolution we were all promised? Or, as the source material for this explainer argues, is the whole thing just a brilliantly designed scam? We're going to break down that pretty provocative argument right now.
Okay, so our source is clearly not pulling any punches here. I mean, what an analogy to start with. It perfectly sets the stage for their entire argument that crypto talks a big game about changing the world, but what it actually delivers is, well, something a lot less impressive.
And boom, there it is, the core thesis. Let that sink in for a second. They're not just saying it's a bad idea or a risky bet. They're calling it the single biggest scam of our generation. So how on earth do they even begin to back up a claim that huge?
Well, to understand the argument, you gotta start at the beginning. We're talking about crypto's original dream and what our source calls its broken promise. You know, the idea of digital cash has been floating around for a while, all the way back to 1983. But the game really changed in 2009. That's when the mysterious Satoshi Nakamoto mined the very first Bitcoin, kicking off this whole movement that eventually exploded into the multi-trillion-dollar industry we see today. And this is really the core of it, right here. The promise versus the reality. On one side, you have this incredible dream, a new kind of money for the people, free from the big banks. But on the other side, our source paints a very different picture. A wild, speculative asset driven by hype, full of scams, and prone to absolutely massive collapses. And that leads directly to the first major pillar of their argument, that for all the talk, crypto has completely failed at its most basic job, actually being a currency. Get a load of this number. Of the roughly 350 million businesses on the planet, guess how many take Bitcoin? About 18,000. That is 0.005%. I mean, after all this time and all this hype, our source argues its use in the real world is pretty much a rounding error.
So why can't you just go buy a gallon of milk with crypto? Well, it boils down to three huge problems. First, it's wildly volatile. The price of your milk could change while you're standing in line. Second, the fees can be ridiculously high. And third, there's just a ton of fraud, which makes it totally impractical for everyday stuff.
I love this quote because it just nails the point. Sure, you can use crypto, just like you could technically mow your lawn with nail clippers. It's possible, but it's completely absurd and impractical. It just doesn't work for the real world.
Okay, so if it's a terrible currency, maybe it's a great investment, right? That's the other big promise. Well, that brings us to the next part of the argument, crypto as the ultimate gamble. Just look at this chart. It really puts the risk in perspective. Bitcoin's volatility is around 60% a year. The stock market, about 15%. That means it's roughly 4 times the roller coaster ride. It's so risky that even crypto-friendly advisors usually say to put, maybe 1 or 2% of your money in it? And it's not just the numbers. Some of the biggest titans of finance have been, well, let's just say they're not fans. We'll start with Warren Buffett, who famously called Bitcoin rat poison squared. Then you've got Dimon, the head of JP Chase. He's even more blunt. He says Bitcoin does nothing and calls it the pet rock. Ouch. And Peter Schiff gets to what he sees as the fundamental problem. Unlike a stock, which represents a piece of a company, he argues that with crypto, when you peel back all the layers of hype, there's just nothing there.
And this risk we're talking about, it is absolutely not theoretical. Check out this number, 3.7 million. That's how many different cryptocurrencies have basically become worthless, gone to zero, just since 2021.
This chart makes it even clearer. Investing in a random crypto coin is literally a coin flip for whether it'll even exist in a few years. And often, it's not a market crash that kills them. It's something called a rug pull, which is exactly what it sounds like. The creators just take the money and vanish. Okay, so the coins themselves are a huge gamble. But what about the places where you trade them? The exchanges? Well, that leads us right to our next point. The entire ecosystem is basically a house of cards. A perfect example is the Terra/Luna collapse. This thing was marketed as a stablecoin. I mean, the word stable is right there in the name. It was sold as the safe option. And then, poof. In just 1 week, $45 billion of investor money just evaporated. But nothing compares to the collapse of FTX. You have to remember, this wasn't some shady, unknown website.
This was the face of crypto. They had Super Bowl ads, celebrity endorsements, their name on a stadium. Their CEO is being called the next Warren Buffett. I mean, they were as mainstream as it gets.
So you'd think, right, with all that money, all that credibility, all that hype, surely this was the one safe place to be in crypto?
Wrong. So wrong. When it all imploded, they brought in the guy who cleaned up the Enron disaster to sort out the mess, and even he was completely stunned. This quote says it all. Turns out, it was all a sham built on illegally using customer money.
Okay, so let's just recap the argument here. It doesn't work as a currency, it's an insanely risky investment, and the exchanges themselves can be catastrophically unstable. So the multi-trillion-dollar question is, why is it still here?
Well, the answer, according to our source, is one of the oldest and simplest motivators in human history: greed. It's the same old story of pump and dump schemes, just wrapped in fancy new technology. It's a system designed for insiders to get rich while regular investors, time and again, get absolutely wiped out. So when you boil this whole argument down, what's the takeaway? The source claims that crypto has failed as money, that as an investment it's more like a casino, and that the entire system is unbelievably fragile. And it leaves us with this final, powerful thought, that it's not the future of finance at all. It's a digital mirage, something that looks real and amazing from a distance, but just vanishes the moment you try to touch it. A very sobering argument to think about. Thanks for tuning in.